Hi everyone, welcome back to my channel. Today, I want to talk about a topic that is affecting a lot of young adults, student loans. Whether you're in college right now or you've already graduated, student loans can be a heavy burden. In this video, I want to go over some of the basics of student loans and give you some tips on how to manage them. So, make sure to like this video and subscribe to our channel for more great content. What are student loans? Student loans are a type of loan specifically designed to help students pay for their education. They can come from the government, private lenders, or a combination of both. The most common types of student loans are the Federal Stafford Loan and the Federal Direct Loan. How do you apply for a student loan? To apply for a student loan, you typically need to fill out a free application for federal student aid form. This will determine your eligibility for federal student aid and give you an idea of how much you can borrow. You can also consider private student loans, which often have different eligibility requirements and interest rates. What are the terms and conditions of student loans? The terms and conditions of student loans vary depending on the type of loan you have. Federal student loans typically have fixed interest rates, while private student loans can have variable interest rates. The repayment period also varies, with some loans requiring repayment as soon as you finish school, while others may have a grace period of 6 months or more. How to manage student loans. According to a recent report, the average student loan debt is over $30,000 and that number is only growing. But don't let that number scare you, because with the right approach, you can pay off your loans quickly and efficiently. Make a budget. Let's start with the basics. The first step in paying off your loans is to make a budget. This will give you an idea of how much money you have available each month to put towards your loans. You should also look into consolidating your loans if you have multiple loans with different interest rates. By consolidating, you can simplify your payments and potentially lower your interest rate. Choose a repayment plan. Next, consider enrolling in an income-driven repayment plan. These plans are based on your income and family size, and they can help lower your monthly payments. However, it's important to keep in mind that these plans may extend the life of your loans, which can ultimately increase the amount of interest you pay over time. There are several repayment options available to help you manage your student loan debt. Some of these options include standard repayment. This is a fixed monthly payment over 10 years. Graduated repayment. This option starts with lower monthly payments that gradually increase over time. Income-driven repayment. This option ties your monthly payment to your income, so it may change over time. Loan consolidation. This option combines multiple loans into one loan, which may lower your monthly payment. Set up automatic payments. It could be tempting to pay down your student loans with any extra cash you have at the end of the month. However, doing so might require slowing down your payment schedule if your finances are tight and you don't typically have additional money at the end of the month. If you're unsure of how much more you can contribute each month on your student loans, carefully examine your budget to see how much you can manage. Next, schedule automatic payments to begin at the start of each month. You won't unintentionally spend that money that way. Be cautious while choosing your payment amount to prevent overstretching your finances. Make extra payment. Another strategy is to make extra payments whenever you can. Even just a small extra payment each month can significantly reduce the amount of interest you pay over the life of your loan. And if you get a bonus or tax refund, consider putting that money towards your loans to make a bigger dent. Refinancing loan. Lastly, consider refinancing your loans. You may be able to refinance your student loans to get a reduced interest rate, a shorter payments period, or both, which will enable you to pay off your debt faster. Be aware that unless you've managed to establish a strong credit history or you have a creditworthy cosigner, this option might not be accessible straight away after you graduate. If not, establishing your credit history and being eligible for refinance lenders may take some time. You must also have a history of consistent employment or income in order to qualify with many lenders. Get a part-time job with school. Getting a part-time job while in school can help you manage your student debt, since you can use the money you make to lower the amount you borrow initially and make your repayment plan simpler. Earning up to $7,040 annually won't have an impact on your ability to get need-based financial aid. To find out whether there are any on-campus job openings, consult the resources or career center at your institution. Jobs on campus are typically more accommodating of odd or hectic class schedules. There are also more online jobs available than ever, offering you additional opportunities that fit your schedule and skill set. You can earn more money between the school years by working full-time during the summer. Take advantage of tax deductions. For interest paid on qualifying loans during the year, the federal government allows you to deduct it from your taxes. Depending on your taxable income, The law permits you to deduct up to $2,500. Both federal student loans and private student loans are eligible for the deduction. If you are legally obligated to pay interest on a qualifying student loan and your filing status is not married filing separately, you are eligible to claim this tax deduction. Additionally, there are yearly adjusted gross income limits for this program. You can take this deduction even if you don't itemize. Another smart move is to pay down your student loans using a percentage or all of your annual tax refund. In conclusion, student loans can be a challenging burden, but with the right approach, you can manage them effectively. Remember to create a budget, consider consolidation, choose the right repayment plan, and make extra payments if you can. I hope you found this video helpful, and if you have any questions, please leave a comment below. Thanks for watching.